All right, what is up, everybody? I'm going to answer a viewer's question here, and it's price action swing trading. So he asked, wow, really good video. It was fun to trade Wednesday. I'm glad you crushed it. Good analysis always. I don't know if you're still taking video requests, but something I found I was struggling with was the day type we would have and how to trade it. Some days the market has lots of volatility caused by larger, longer time frame traders doing business. I find the time and sales to be the best tool on those days, and thickness on the DOM to not be a good signal. And other days the market is actually quite quiet because there are less large traders. I find thickness of DOM to be better signal than time and sales on these days. I was wondering if you felt the same thing about certain day types, and how, if you do at all, change your style based on those days. If you can make a video about identifying different day types and pre-market prep and how you trade differently on each day, that would be a fantastic resource. Assuming you do that, maybe it's just me. Either way, keep up the great videos. You basically taught me everything about scalping. So this guy scalps, you scalp, I get it. How am I good? There's just really no easy way of answering this. So I'm going to do a summary of everything. I'm a little confused about something, and then I'll break everything down. So you say that the markets that have lots of volatility, you find the time and sales to work better. That is true in a sense. So you were right thinking that way. And other days you say when the market is quiet, that means there's not as much volume and volatility coming in. That's what you're talking about. You find the tape to the time and sales to not be as good. Now, when you're talking about thickness, this is where I'm confused. Are you talking about overall market thickness on the bid and offer, or are you talking about resting size? Because I'm going to answer both of those questions, just so you know. I'm going to answer both of those questions because I'm confused on which one that is, because they're both kind of important. So yes, my style changes not between just each day, but between moments of slowness and less volatility, and then when the close comes, it starts to obviously get more volatile. So not only does my style change throughout the day, but it can change day to day. So I'll try to attempt to answer that one as well, which I'm going to let you know none of this shit's going to be easy to answer. If you can make a video about identifying different types of pre-market prep. Okay, first and foremost, I don't trade the mornings that often. I trade usually 3 to 4 hours before close. So as far as doing some sort of pre-market prep, I don't. And I'm not saying that you shouldn't do pre-market prep. I think most people that come to this channel don't scalp in the way I do unless they're new and they're trying to learn how to scalp. A lot of guys I deal with take more position day trades than these high-frequency scalps like I do. So for them, pre-market prep is going to be a lot more important. Now, do I want to know some pre-market prep shit? Yes. And for me, it's not that complex, so I'll try to break it down here. I just look at the overnight session. Are we trading within that overnight session, or are we trading outside of that overnight session? Did that overnight session make a gap between yesterday's regular trading session, and is the current price before the market opens gapped up from the previous day's regular trading hours? Are we inside of the previous day's profile, or are we outside of that? So I'm kind of looking at it from the perspective of where are we from the previous day or days, and where are we in correlation to the overnight? Because if there's a gap, I want to play it. So yeah. Now as far as like being able to tell different days how fast it's going to be or how slow, you can it's hard to say right off the bat because again I come in the afternoon, so it's pretty much been established at that point, right? And I'm not saying the morning isn't bad trading. It's just I think the morning has great fucking opportunities. That's just how I run and operate right now. So I don't pre-market prep. And just by looking at that kind of stuff, it doesn't tell me much about what the day is going to be. Usually when the market opens, I can figure out how it's going to be. Again, it depends on what the previous session looks like. If we're trading within ranges of the previous day, typically it's going to be a little more quiet. It really depends. I didn't trade yesterday, which was Thursday. The internet was down. But apparently the market sunk in quite a bit, right? It took out multiple days of ranges that had previously been established. So you're going to go into the next session knowing that it's going to be probably a little bit more violent and thin. If we're really coming out of certain ranges from the previous day's profiles, it's going to definitely probably be a little bit more. It really depends if we're going up or down. And it really depends on that kind of stuff. What else was I going to say about that shit? I'm sorry, I'm thinking, so this video is obviously long. But, you know, just like that kind of stuff doesn't really help because I'm so in tune with how the market, because it's always changing. It's either fast or slow, or it's really fast, then it goes through a period of consolidation and the volume starts to slow up a little bit and then it speeds up again. So the volume and the volatility is constantly changing throughout the day. And I've traded this thing for so long that I've pretty much seen it all. Not saying that I've seen it all. You know, I've seen days where the average thickness is about 400 on the bid or offer, okay? Then I've seen it where there's absolutely not shit, maybe 6 back in March when the COVID thing was happening. So generally you can just look at how thick the market is and kind of gauge what it's going to be, and then you just need to, it's this weird connection you got to have with the market. And you just need to know when to adapt and change. It's like when I start trading in the afternoon, it's obviously more slower than the close, right? So my style is shifting throughout the entire session. So you're not going to necessarily just shift between each day. You're going to be shifting throughout the session as well. You're constantly fluid in the way you trade. It just depends how fast each price is being taken out. Okay, so today, Friday, is rollover, so the market's especially volatile and thin, not to mention that the market had some meltdown on Thursday, right? So that adds another layer of craziness to it. When it... And there's challenges between when it's slow and when it's fast. I'm going to let you know that. So that kind of answers the pre-market prep, hopefully. As a scalper, it doesn't really matter. If you look at any of the trades in this FOMC video you watched, you'll probably notice that most of these trades have nothing to do with any sort of shit that happened the previous day or any pre-market prep. These trades were pretty much spur of the moment type things. It's not random trades. I take trades for a reason, okay? But I trade the moment. So as a scalper, if that's what you're trying to do, you trade the moment. Yes, there's certain patterns and stuff where I'm going to hold a trade a little bit longer. This one, scalping into a 20-minute trade, that's an example. So there's certain trades where I'm going to hold it for a lot longer than my other trades, and it depends if that's crossing an area like a point of no return, because there's certain areas I can tell where the markets might not come back to it for a while. Those are a lot harder to explain. I can't just break that down right now. I had to watch that because that gives you kind of an idea of what's going on. So definitely watch that one. And the thing about it is, it's just it's so discretionary. It is so discretionary that, I mean, I'm constantly shifting gears, constantly adjusting. And again, if you watch most of the trades in this video, none of that shit has anything to do. I turn on the computer, I know how fast it is, I know it's the FOMC, right? So naturally, that makes the market faster. Plus, we're getting close to fucking rollover on Wednesday. So, I mean, naturally, the market's starting to split, where some of the volume is in June contract, some of the volume is in September contract. Things like that you can be aware of. So when you have a volume split like that, it makes the markets thinner and quicker. And I don't suggest trading rollover at all. You need to practice rollover. So as far as like style goes, I'm going to draw a picture. Okay. Let me actually look at what your next question is. So yeah, my style does change, so that kind of answers it. We'll get a little bit more into that. And I'm answering your questions backwards because it just makes sense to start with prep and then work my way up. So you're talking about, so I'm going to address these two questions. You talk about lots of volatility and not a lot of volatility, and when the time and sales works and when it doesn't work. So I answer that in a summary, but it's not that simple. Okay. So here's like slow conditions. So we have two spectrums, right? We got slow, we got fast, we got, I would call normal, all right? And then we got super fast, and then we got, we'll put a D over here, dead, right? Dead, slow, normal, fast, super fast. That's just how the market is, how fast the market is trading. And when I say super fast, that means it looks like Friday. You know, we were taking out multiple points in a blink of an eye. It kind of looks like March, right? Just massive amounts of volatility that is covering several ranges. Now, one thing you need to keep in mind, my patterns and everything I look for works in every condition. It's just the way I approach it is going to be different in different conditions, okay? So one thing that, because you're obviously, what did you say you were struggling with? Let me look at that. Let me put that over there. I found I was struggling with the day type. Okay, so for instance, you're going to be good at a certain day type, right? So we'll make you red, right? So, oh, come on. Give me red. So, you know, this is you, right? You're good at conditions between normal and fast, and this is hypothetical, right? The more you trade, you might start to get better within these conditions. So, for now, you're probably good at one type of condition, which might be here, right? Now, for me, I've been practicing and trading so much that I can trade pretty consistently in all of these conditions, right? So this goes for anybody that's new. Anybody that's new, you're going to, and this is why a lot of new guys end up getting murdered later in their trading career, okay? This is exactly why I tell everybody it's going to take you a fucking year to figure this shit out. You need to go through all of these cycles. You need to know what it's like to trade in the summertime or around Christmas when it's dead. You need to know what slow days feel like to normal days, the fast to super fast, right? You're going to get more fast at the open and close than you would around lunchtime. It's going to be slow. So you may not be good in certain conditions. So a lot of guys, maybe the market is trading a certain way for a week or two, and it's maybe trading normal. A lot of guys are going to be good at trading normal, but the moment it starts trading fast, they can't do it, and they start bleeding out all this money. That's why I say don't trade rollover. You need to practice it enough that you know what you're fucking doing. Like when I traded the FOMC, it reminded me of certain days that were similar to March, or not March, around when the COVID thing started to make the market get a little bit thicker. So I pulled that out of, I remembered how I traded that, so I ended up applying it to that day. So the more of these days you trade and practice on, the better you're going to be at being able to trade all of the conditions. It's just that simple. So there's a point where you don't trade. You don't trade it when it's dead as hell, and you don't trade it when it's too fucking fast. Okay? There's no point in trading the very extremes, but you want to be good enough that you can trade as close to those extremes as possible, and you need to identify when it's shifting. So, if the market is real slow, I'm going to be taking more fade trades. When the market starts to speed up and get fast, I'm not taking breakout trades when it's slow, okay? When it starts to get normal, I'll probably take both types of trades, and then when it starts to speed up, I may take out more breakouts, but I may still do both, okay? And the reason I say breakouts work better in faster conditions is because you're talking about this thickness thing. Let me address the thickness, okay? So thickness doesn't matter as much. It just matters how fast the orders are coming in, and when those orders come in, how far is it pushing the market? Is there a lot of volume coming in, but the market's only moving 4 ticks on average? Or is there a lot of volume coming in and it's moving several points at once? You need to figure out what it's doing, and you need to adapt to that. And it's constantly changing. That's why a pre-market prep doesn't help. So if the market has an average order of 400 per bid and offer, and it's that thick, well, 600 orders isn't that big, okay? When there's that many orders on the bid and offer, generally there's that much volume in that market, in larger volume at that, like larger orders on the tape that will be able to move it, compared to a thinner market where it's being moved on smaller orders. So 600 orders isn't shit in a market where the average bid or offer is 400, okay? So generally when the markets are the way they are now, where there's like 200 or 150 on the bid or offer, 600 would be pretty big. And depending on the conditions, depends on if it'll go through or not. So when you talk about how thick or thin it is, it really depends. If it's super thin, I'm a little more cautious, like rollover. And there can be a deception with your eyes. Like, yes, there could be 150 orders on the bid or offer, which looks normal in my opinion. But you need to really look at the spread and how thin is that spread. If that spread is about like 15 and it's constantly staying about 15 on the bid or offer on average, the spread's pretty thin, and a lot of these orders are going to start to pull out of the way. Not always, but you just need to be wary about how many ticks these moves are taking out. So is it taking out a lot of ticks, or is it taking out less? Is the volume high or is it not? Now, as far as thickness goes, you mentioned you say that some days the market has a lot of volatility caused by larger, longer time frame traders doing business. I find, okay, you find time, and other days the market is actually kind of quiet. There are less large traders. I'm not, okay, as far as like large traders, it really doesn't matter. There's large traders who play in slow conditions, fast conditions. I don't know what your definition of large traders are. Somebody throwing 500, somebody throwing 100 lots or more. Yeah, that's a large trader. But for me, like, if somebody's swinging 30 contracts, they're still a pretty large trader, or 50. It depends. And these, you got to also remember, these larger traders will break their orders up on the tape, or they could be working the limit and absorbing. So you really don't know. They could be working in slow conditions, absorbing retail orders, because that's how they trade. And then all of a sudden they flip the market or do something to stop everybody out. So just seeing the tape print 100 lots isn't just one way you'll be able to identify large traders. Like today, we were trading around 3,000. I know for sure that institutions like to trade big round numbers like that. They do. And there's more transactions. The market always tends to really get hung up on those prices. So they play in different areas. So keep that in mind. I get where you're coming from as far as larger, longer time frame traders. I get what you're saying, because generally on neutral days, they're really not there. But at the same time, on neutral days, there still is larger traders. It just really depends. So I get what you're saying. So I'm not trying to argue that. All I'm just trying to say is, like, it really doesn't matter because you're trading the moment as a scalper, right? So it really doesn't matter. These guys will play on slow markets, so I don't want you to be fooled by that. They will. So you find the thickness on the DOM to be better signal than time and sales of these days. So I don't know what you mean by that. Do you mean by resting large orders? Or do you just mean the thickness in general? Because sometimes the thickness is the same throughout the entire day, and it's either fast or slow. So that's where I'm a little confused. So let's talk about size, because I kind of talked about thickness. It really doesn't matter. It just depends on volume and volatility. Okay? When there's not much volume or volatility, your tape, you're right, the tape isn't as good. And the reason I say that is because when it's fast, the tape, it's flowing in at such a steady pace in faster conditions, you're better able to gauge if a range is going to break out. Okay? For instance, let's try doing something here. So like in a slow conditions, hold on, guys. So, maybe this thing's trading a 4-tick range or whatever, right? This would be slow, and it's looking like this all afternoon, right? Your tape is not going to be as viable in this, and this is a 4-tick range. So 4 ticks. Your tape isn't going to be as viable, especially if the volume's low. And let me explain how I adapt and change. So maybe this can answer some of the questions because I'm confused. So I'll answer what I'm kind of doing within these different types of conditions. So if it's like a 4-tick range and it just looks like a fucking, like, it's just dead, right? And it's doing this forever, for fucking 10, 20 minutes. You cannot rely on the tape because it's coming in so slow, right? Especially your mid-size orders. They're just coming in so slow, so slow. And you'll have periods where all of a sudden the volume picks up a little bit and it just pops up down and starts range trading again. And then all of a sudden, you know, this thing's real dead, and all of a sudden a bunch of volume flows in, and then it pops up again, and then it starts to die off. Trading these kind of conditions is tricky. Like, I think trading very slow conditions is just as tricky as trading very fast conditions. And that's why I'm saying on both extremes, you want to trade as close to those extremes as you can on both sides. Like, you're going to have a sweet spot. That's why you are struggling. You can trade a certain type of condition, and you haven't practiced other conditions enough, other different types of days enough to be able to handle those days. And again, my patterns are the same. My patterns are either really small and tight. Like, for instance, you know, we can have a Z pattern, right? Here's a Z pattern. Like maybe the butterfly. I talk about the butterfly in the last video, right? So the butterfly can look like this in the small market, and then it kind of dies off. And I'm going to either try to play it on the way out this way, or try to play it out on that way, but not in a slow condition. So let me rephrase that. So the butterfly, it works in both slow and tight conditions, and it works just as good in large volatile environments where it's covering several ticks. So it's the same pattern that I'm looking at, and it happens in all conditions. So my patterns, I approach them differently, okay? So the patterns I'm looking for, it's there. It was there in March when the markets were melting down. It was just, there's a lot more of this shit going on, but the patterns were there, and trying to nail them was a little bit trickier. So again, the butterfly, you know, it looks like something like that, okay? And then it usually returns here. So again, and it can look like that over the course of a few ticks, or it can look like that over the course of a few points. You know, it really doesn't matter. My patterns are always there every day, multiple times a day. And I play a lot of ranges. When these little ranges start to get established, I try to play ranges. It doesn't matter if the range is huge as hell, or if it's real tight. I'm still probably going to play it in some way or another. There's always ranges. There's always little breakouts, right, every day. So what I look for is there every day. So the way I trade it is going to be different. So if it's slow and grindy like this, and say we got a range, I mean, most trades in these slow grindy conditions, I'm fading, okay? The reason being is, well, I mean, if you do watch your tape, you're going to start to see more buyers come in over here, and then you're going to start to see more sellers, and then maybe, you know, right here, it pops up by a tick compared to where it was here, and then all of a sudden it reverses. And I fade a lot more in slower conditions. And I don't try to break out of range trades. I prefer range trades. Like, when it comes to just raw trends, it's really hard for me to play those. I can get them initially, or I try to get it when it starts to end. But for me, trends are a lot more difficult. For me, just these types of ranges that get set up throughout the deal. So I'm fading a lot more in slower, grindier conditions. And part of that is there's a lot less volume to get us out of these ranges. Obviously, because volume is low. And second is, when you're watching that tape, and the reason the tape isn't as good is it's coming in at such a slower pace, it gives other traders time to react, time to think, and time to take advantage of certain things. Sometimes these larger traders wait for the other guy to make a move. So sometimes you'll just see the fucking market stop and no mid-size is coming in on the tape, and it's just retail traders. Retail traders trade everywhere. They're stupid, whatever. We need those guys, okay? Unfortunately, they need to exist. But sometimes they'll wait for the other guy to make a move. It's like a little showdown, you know what I mean? Like when two cowboys meet in the middle of a western town and they're waiting for each other to draw the gun, somebody's going to shoot. So, you know, if it gets up to here and and it pops up by a tick or two right here, and the tape was blue on the mid-size and all of a sudden nothing's happening, that's not good. You know, I'm going to want to get the fuck out of that. It doesn't matter if it's in a period of a lot of volume and volatility or it's dead. Now, the thing is, again, when the market's dead, the tape isn't as good because it's just coming in at such a slow pace that you really don't know what's on the other side of it. When it flows in a little bit quicker in those more higher volatility volume environments that you're talking about, that you see it working better in, it's because there's a rhythm to it. It just flowing in. It's flowing in. It's like the difference between turning on a sink and letting the water drip. Okay? If the sink is on, the water's constantly flowing, right? And you just have a better feel of, maybe it starts to spit a little bit more water. Maybe the sink doesn't just flow perfectly. Maybe it's flowing and spitting a little bit more heavier water, and then it starts to slow up a little bit, but it's still flowing all together, and you get that. Now, when it's dripping, like if you leave a sink on and it's dripping, the seconds between each drip is so hard to gauge. Like maybe it'll go drip, drip, and then all of a sudden there's no drips. And then it goes drip, 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 no drips. Drip, no drip. Maybe a little drip starts to come out at the sink head and then it kind of sucks back up into it, right? That's like trying to read the tape in slow conditions. It's a lot harder to gauge what's going on. And that's why this is called order flow trading, right? You're taking trades based off the flow of orders, and when the orders are actually flowing in at a steady enough pace, you can make good decisions. And as a scalper, volatility is good. In these slow conditions, I'm fading, and I never want to set myself up to take a loser. I will do everything in my power to break even, okay? When the market's a little faster and a little more volatile, I'm okay with taking a little bit of a loser. It's just going to happen. There's no way in hell I'm going to be able to nail these things right on the fucking tick. I'm going to do my best to nail it to the tick as best as I can, but there's no way. Sometimes I'll have some bleed through where it comes past me a few ticks and then it reverses. That's just part of it. And sometimes I just have to take a bit of a loss. But there's so much volume and volatility that a small loss is nothing compared to an environment where it's slow and choppy. When it's slow and choppy, if I'm on the wrong side of this move, I'm not getting that shit back. Maybe it goes against me 5 ticks out of nowhere, because when it's slow and choppy, there are these moments where the volume and volatility pick up a little bit, and then it dies off again, and then it picks up again. And if you're on the wrong side of this move, it's not good. So that's why I'm very careful and very particular about trading these, and I prefer to fade them. It just makes more sense to fade them. And I've traded slow conditions enough that I've failed at taking breakout trades on ranges, because I love taking breakouts of ranges. That's just something I like. And the problem is I had gotten so used to it that it doesn't work all the time, and it doesn't work that well in slow, choppy conditions. So when it's slow and choppy, I'm going to just keep fading it. And yes, I mean, there could be a possibility of this shit happening. But, you know, for the most part, if I keep trying to play long here, short here, long here, short here. I'm going to just keep getting murdered. One trade after another. Whereas if I just keep fading, this can happen, but I'm so tight on my management, it's not going to get too ugly. Okay? So you got to be careful because you can really lose bad if you're taking these breakout trades in slow conditions because you're trying to hit something like this. That doesn't happen that often. You're trying to hit this fucking type of breakout, and it just doesn't happen that often in slow conditions. Now, the thing is, I don't take fade trades necessarily in slow conditions unless I want the volume to pick up a little bit. If the volume isn't there, that's why I have that pace of tape gauge. Yes, I can read the pace of tape on the tape itself, but for the most part, I know that I don't want to take a trade at all unless we're at about 250 contracts. And in these type of conditions, I'm sitting in the queue and I'm not taking market orders as much at all. So that's kind of the difference. When the market's real fast, I'm more acceptable, and it's more acceptable to take market orders in faster conditions, to pay up for something. When it's slow like this, I want to get in at the exact right price, and I want to break even, and anything outside of that is unacceptable. That's what makes trading in slower conditions a little bit harder. And again, the faucet dripping analogy, it's harder to read the tape. So at that point, I'm looking at let me bring this up. So when the market is slower, I'm looking. So when it's fast, I'm watching it right here in the tape. Pretty much, that's where my main focus is, right? Because it's flowing in so well. I mean, look how extreme this is. And another thing you mentioned is, like, if this market was slower, this 94.75 would have held this up and not have bleed through like it did here. Okay, so when the market slows down, it's like driving a car real fucking fast, okay? If you're going to ram a car through a wall, you need to go pretty fucking fast, right? Same thing that's happening here. It's already going fast, so it's able to bleed through it. If the conditions were a little bit slower, I know the size and the fact that this is a point of control, those two things together are probably going to hold the market up. So if it was any slower, it would probably hit it up to the tick, but it was so fast that it's to be expected. Now, if the market's really slow, I'm looking at the market orders in here between the spreads. Okay, I'm looking at the market orders between the spreads, and I'm watching the limits very carefully. I want my bid, if I'm going long, I want the bid to be larger than the offer, and I want to start to see more shit print there. But at the same time, I'm going to try to get in on the queue instead of market ordering because it's too easy for one price to be trading. You'll see volume come in on both ends, but they'll only be coming in on one price. I need to see some sort of like two-way volume, so I need to see it coming in down here and up here at the same time before I decide to make the trade in slower conditions. If the volume is only coming in here and here, and that's how it's trading, then there's really no move to be had. So that's why I kind of watch this in slower conditions, even though I can read it. But when things are real fast, I can't read these orders in here as well, so I'm watching the tape, and that's where the tape becomes more important, and that's where I'm using that faucet analogy. There's a flow to it, and if we're hitting the extreme edges of a range, like, okay, so let's talk about faster conditions now. Same thing, you have ranges in faster conditions and slow conditions. I mean, duh. So, maybe it's doing something like this. Okay, So do we go long or short here? Trick question. So up here, the tape's going to start printing. The tape's going to start printing more red on the mid-size. Okay. If you don't know what I'm talking about with mid-size tape, you need to go watch my time and sales video. Okay. I'm not going to break that down. This guy knows. And down here, you're going to have more buyers start to come in, and then you'll start to see buyers on the mid-size up here, but then you'll start to see the tape transition into more sellers up here, right? Let's see if you can see it in here. Like, look, it's mostly blue right here, and then it starts to go into more and more red. So it's like transitioning, and the price is currently down here. That range is so fucking tight. I'm trying to find maybe a good example of something. See, these ranges are so goddamn tight that I'm not. So, for instance, we were here. I actually took this trade. Notice how the tape is starting to print more red right here, right? Theoretically, I need to start to see more blue down here for it to go up, and you're only seeing 10 lots here. Now, if this market it comes through here a little bit, I'm going to take the short here. But if no red starts printing on the tape and it just starts stalling, I'm getting the fuck out of it because it could instantly go blue and just zoom up. So maybe that happens. Now you're starting to see more mid-size happen right here, and this is why your ranges look the way they do. You have your buyers coming in here, but maybe you have less buyers coming in here. Maybe you had more buyers. Let's fill this in. Maybe you had more buyers here than you did here on the tape. That's why, like, you need to watch how the tape is every time this fucking thing's bouncing, and you need to remember, was there more sellers here than there was here? No, these things are the same amount of sellers. Over here, there was a lot more buyers. Now there seems to be a lot less buyers. We come up here, now sellers are stepping up, buyers aren't stepping up, and now it's being pushed down here. Now you're seeing an intermix of selling and buying down here, but it's slightly more buying that it gets pushed up here. Here comes sellers again, but there's a little bit more selling right here. And then all of a sudden I'm starting to see selling here, and it's quite a bit. I'm going to jump on top of that, and it's probably going to go, right? But what if it only comes here, and then all of a sudden that selling stops, and now there's nothing, okay? Now there's nothing. Well, there's several ways to approach this. I mean, if I start to see a little bit of blue come in, I might hold out. Maybe it comes back up a little bit, and then all of a sudden a little bit of red comes in, and then it kind of goes like this, but then I start to see a lot more blue start to come in. I'm getting the fuck out of that trade. So that's why your mid-size orders are important, because those are the ones that actually are going to move the price, whereas like 1 lots, 5 lots, anything under 10 lot currently isn't going to really move the market at all. Now, if the markets get so thick to the point that the average contract is 350 to 450 on each bid and offer, you're going to want to filter out that mid-size to maybe 20 lots or more. Anything under 20 isn't really going to do anything. So you might want to do that. I don't suggest filtering out your tape to anything less than 10 on the mid-size, no matter what. Just saying. Now, the tape is equally important in slow and fast conditions. Okay, don't think it's not. Don't think it's not. Okay. It is a little bit more important it's a little more important. It works a little better in the faster conditions like you're talking about. But remember what I was talking about earlier? So, and this is a pretty good example. So give me just a second here. So you got your dead, you got your slow, you got your normal, you got your fast, and you got your super fast. And these are your conditions, and again, we drew this out. When the market is dead, tape doesn't work here. So your tape, no tape, right? No tape. It doesn't work that well in dead conditions. And somewhere around, there's a point where you just have to watch it and see when it starts to work out. Maybe the tape starts to become better right here. This is where it's actually starting to make a difference, is right here. And the tape can keep working, but there's a point where the tape stops working if it gets too fucking fast. Now, in my COVID video, my scalping COVID video, I wasn't reading tape in this shit. This was like pure pattern plays. That's it. And I was playing these pivot breakouts, which sometimes pivot breakouts work, sometimes they don't. You have to test certain things. And some days pivot breakouts work real good, sometimes they don't. Sometimes they'll go into the price a tick, and that's not good, because if you're waiting a tick above the previous pivot, it could tag you in at the top, and now you bought a top. So that's why your management needs to be really good. You're going to test a few of these strategies, and if they're not working, then you need to approach things differently. So my strategies and the way I approach everything is relatively the same. It is just adjusted constantly as the market's changing. Because, I mean, you can have a fast condition, but it'll slow down to about here, and then it'll come back to fast, but the average is fast. I mean, you know, maybe it's all over the fucking place and then no volume and then pop, you know what I'm saying? So this would be slow, right? And then you got fast, and then all of a sudden the thing explodes. Now you got super fast. So every little thing that's happening, you're constantly adjusting. You're constantly adjusting. And again, you know, maybe you're only good at normal speed. Maybe you're only good at trading here. You need to practice trading to the extreme edges as much as possible. And this is where I don't agree with a lot of traders. A lot of traders, they prefer to trade one type of condition, and that's all they do. Some traders just trade the open, right? When they trade the open, they're just trading fast. That's all they know. They can't handle dead. They can't handle slow. They might not be able to handle super fast. But the more you practice in each of these conditions, the more conditions you're able to trade. And as a scalper, that's great. Why would you limit yourself to one type of condition and not practice in others? Why would you limit yourself to fast and not try to trade dead conditions? It makes you a better trader in the end. And this is exactly why I'm talking about doing this for a year on sim, especially scalping. I don't give a shit. You have to do it on sim. So now the thing is, there's certain weeks where it can be normal. There's certain days, maybe Monday, Tuesday, and Wednesday are normal, right? But within that normal speed, you're going to have each one of these. You know, you're going to have fast, super fast, dead within those days. But overall, the day is going to be mostly normal. Maybe Thursday and Friday are fast. Maybe Thursday and Friday are fast. So not only are you looking at this from an intraday perspective, because it's constantly changing, but you're also looking at this on a day-to-day basis, and you have to kind of work those two things together. And the only thing I can say is you're going to fail a lot. You just got to keep practicing, because how do I know to fade fucking slow to dead conditions? Because I've done it so many times and I failed at it so many fucking times. I know that's what I have to do. Now, there is times when the tape doesn't matter, because certain strategies I use, and this is where I just completely throw you off for a loop, right? Okay, for instance, in that video, if you recall, we had these two distribution zones, right? And if you remember, there was one trade I took where the price shredded down. I think it's actually this fucking video or this particular example. Come on. Oh, here it is. I don't know. So the price shredded down and it hit that other, here's that point of control, and it bled through it, and then it popped back up. And remember, I took a fade. I think I took a fade in that video. I didn't get much out of it, but it was doing like this thing. I took a fade right up here, and then it kind of fell down. That's not really a tape play. That's more of a pattern play, and I just know that works. Because sometimes when you have these plays where it goes through a point of control, it gets pretty close to it, and the move is so fucking overextended and dramatic that the moment it just starts to slow down, it's just good to take a fade at that point, and your tape's not going to confirm it, because by the time the tape confirms it, it's already fallen back in. Just as fast as it went up, it's going to go down just as fast. And I'm trying to get that hang time right here. And that's not necessarily a tape thing. So let's get into something else. I got to stop doing that. So, you have, it's going to be easier for me to write this. There it is. It's whatever. Okay, here we go. So your tape, your limits, heat map, size, because that's what the heat map is about size, price patterns, auction market theory. What else? So there's a time and place where the tape works well and doesn't. We've established this, right? There's a time and place where you want to be more focused on the limits. You know what I'm saying? Larger resting size in the limits isn't as viable in fast conditions as it would be in slow conditions. So, watching this is a bit more important in slower, but it's always important. Heat map size. So the thing about size is, one time I seen like 2,100 contracts on the bid, and you never fucking see that ever. That's unusually large. And this was during March. There was absolutely no fucking liquidity, right? There's about 6 contracts per bid or offer. All of a sudden, 2,100 orders came up, and that shit got destroyed. So when the market's super thin and there's no liquidity, thin market, no liquidity. Thin market, thin market basically is less liquidity. Large size will get taken out. It could temporarily hold the market down, okay? But if the market is slower and thicker, size will be able to hold the market down, and the price can bang into it 4, 5, 6, 7 times. Sometimes it'll go through it by a few ticks and then roll back over. It's easier. It will. What did I do? So, you got to realize that. Now, price patterns, always there. It just always there. It just depends. Are they covering several points or a few ticks? You know what I mean? The pattern's always there. And auction market theory is always there. It's always there. If you're auctioning below a point in control and you're auctioning below it for a while, there's a high probability it's going to start to auction above it once it gets to that point. Especially if it bounced off the point in control and started trading away from it quite a ways and it puts in like a Z pattern at the bottom. Typically, if it's auctioning down there for a while, it's going to eventually cross it, maybe chop on it, but it's going to cross it and eventually start to test higher. That's always there, always works. It just trades a little bit differently. So all this shit, just like when you're looking at slow markets, dead markets to super fast markets, that gauge I was showing you, yeah, the tape doesn't work as well in super fast or dead conditions, but you need to always be watching it. Your limits, you need to always be watching them. Your heat map, you need to always be watching it. Slower and thicker size, you need to constantly be aware of it. Price patterns, always be watching it. The auction market theory, always be aware of it. You need to constantly be aware of things, and you need to adjust. What do I need to put more emphasis on? Do I need to put more emphasis on this resting 500 that's been sitting there for an hour? If there's contracts sitting there that have been resting for an hour, I'm looking to take a play off that, and tape doesn't really matter, but at the same time, the tape does matter. If the market's super fucking fast and that 500's sitting there, well, I know that it's probably going to get blown through because thin market, large size will get taken out. I know that it's going to get taken out, okay? Now, if the market is, if the market's real thin, for instance, completely went on a tangent, didn't I? So say the market's doing this thing, it's bouncing around and shit, and all of a sudden, it goes down. I'm short right here. Okay, I go short. Okay, but as soon as I go short, I see 500 offer come up. I'm getting the fuck out of it, okay? Especially if the market's slightly thinner because, again, that's liquidity. And if it came out of nowhere, it's probably going to want to go back into it. And whatever it does here, it'll either blow through it or it'll blow through it a few ticks and then come back down immediately, or it could bounce under it. It doesn't matter. Either way, that 500 is not good. You would think a 500 coming up behind you is a good thing because you got size to lean on, but if it came out of nowhere in a thinner, more volatile condition, the market's going to want that liquidity, so it's going to go back for it. So I'm getting the fuck out of it. Anytime I see something like that, again, I need to stop doing that. Now, if the market's a little bit slower, right? If the market is, god damn it. If the market is a little bit slower, right? It's a little bit slower, but it's maybe normal conditions, it's still moving, and then that 500 comes up behind me. And the speed of the market can kind of confirm it. Maybe I'll go short, and then I'll have that behind me, right? And there's a higher probability it's going to bounce off of it because the market's a little bit thicker, a little bit slower. So now I'm adjusting for that. Again, if the market's super thin and fast and that 500 comes in, it's going to want to go through it. So I'm constantly adjusting based off the speed of the market. The speed, the volatility meaning how many ticks is it taking out in these moves? Is it taking out 8 ticks in a range, or is it taking out 4 ticks in a range? If it's only taking out 4 ticks, that's less volatility. So that's the difference between volume and volatility, is how many ticks in this thing is it taking out. There could be a lot of volume and the fucking thing's getting stuck like that, right? So, for instance, if there's a lot of volume and it's like anything under 10 lots, you know, it's you know, less than 10 lots. I don't know if I did that right. The less than. So all this is happening and it's below 10 lots, but it's a shitload of volume just jamming within a 3-tick range. That's retail, and that retail is getting trapped. And the more traders that are getting trapped because there's more volume, the more likely this thing's either going to blow out high or it's going to blow out low. And I'm going to try to get on that and not fade it. I'm going to try to play the breakout of it. And I want to watch the tape to kind of confirm if some mid-sizes are coming in. Or sometimes I'll just set an order on either side of the deal, and whichever way I get it, I get it. So I think I have a video where I actually do that. So, you know, but if there's a tight little range and it's still retail, but the volume isn't much, the volume is lower than the last example, it's not going to blow out as high. It might be like this. It might come up a little bit because there's less guys trapped in there, so therefore there's going to be less stops going off. So you just got to really, you see the way I'm thinking about these things? You got to really be deeply thinking about how much volume is in this motherfucker and who's putting that volume in. Now, one thing I don't, you know, like sometimes when it's real nuts like this and it's very volatile and it's like Wednesday, you would maybe have a bunch of sell blocks come in, which means 100 or more, and they'll come in. That doesn't mean sell it. That doesn't mean sell it, because a lot of times when it's real volatile, you'll see these sell blocks come in and then it'll just go the other way. If the market was a little bit slower, if the market was a little bit slower, more normal conditions, not slow. I don't want us to get confused between slow and fast. If the market's a little bit more normal, right? And then I start to see these blocks come in, and depending, I mean, where are we in the range and all that, if I start to see blocks come in, I'm probably going to be more inclined to short with it. But if it's real fast and I see blocks come in, I don't want to play it at all. I don't want to play against blocks, period, or I don't want to play when I see large bids and offers come in a strange area and they keep coming in and they're trapping the market in a little range like this and they're doing like some weird spoofing shit. I don't want to play that. I don't want to be a part of that because they're doing something weird and I don't know which way they're wanting the fucking thing go. So when you start to see this manipulation, I tend to stay away from it. Maybe if we... So maybe we're range trading or something like that. I'll see a bunch of blocks hit, say here. Let's go ahead and make it red. So I got blocks hitting here, and then it comes up here, and then I see blocks hit it again. Well, the blocks hit it twice, so I know that there might be a possibility that they're going to want to shoot it down again. Plus, we just don't have the buying pressure to get up there. So, you know, all of a sudden it comes down here and then boom, blocks will hit it. And then it comes here and then you'll see these blocks come in, but then it just starts to absorb or whatever. It's all these weird little different things I'm looking for, and I'm constantly adjusting based off volatility and volume. And the only way you're going to figure this shit out is by watching one fucking market. So just newsflash, for anybody that's trying to use my strategies and what I talk about in any other market, it's not going to fucking work. Okay? All these markets are substantially different to the ES. Okay, I've looked at something. The NQ is thinner. The bonds are thicker and slower. Crude just sucks. Whatever, if you trade it, that's cool, but keep in mind, a lot of what I show is not going to fucking work in those markets, period. Okay? So focus on one market, become a market specialist, and then you get to understand it on an intimate level like I do. So it's hard to really explain. I just know. I know you're constantly shifting gears. You're constantly shifting gears. And I can just turn on the computer, watch it for 5 minutes or so, and then I look at a chart. And I mean, I can look at a chart, and you know, this is a 1 minute chart. You know, you can just tell how, like, look how tight these bars are compared to, you know, these other bars. There's quite a bit of volatility. I mean, you just look how tight bars are. If the bars are real tight on a fucking chart, like right here, there's a lot less volatility than in a range where you see it doing this. So, like, so that's how I can kind of gauge what's going on. I'll just look at a chart, and right here, there's quite a bit of volatility in that particular range than right here. You know what I'm saying? So, just gauging, just constantly shifting gears, and there's certain times where certain things work, and there's certain times where I need to focus more on the tape or not, and I'm constantly shifting gears, and that's what makes this so hard. So what you're asking is one of the hardest things that I don't think I've covered in a video that I talk to other traders about, is constantly adapting and shifting gears and changing. It's the same approach, but it's always slightly different, and the more of these conditions you change, the more of that your sweet spot starts to expand. So your job as a scalper is to expand that sweet spot. You don't want to just get good at trading one type of condition, because look how much opportunity you're leaving out there. I mean, for me, I want to be able to fucking just get to the point where I can trade constantly. Okay, and that's totally possible as long as I'm practicing, and you have to get out of your comfort zone. And that's a lot of traders get into this comfort zone, they hit a plateau, and then they might make 100, 200, 300 bucks a day, and that's it. But in my opinion, if you get into fucking this, why are you not going to go all the way, especially if this is going to be your job and your fucking career? Why are you not going to get to the point where you are going to make $500,000 a month? $10,000 days, $20,000 days. It's possible, and the only way to get to that, I mean, because let's face it, everybody got into this because of the money and how much you can make. Okay? Right? Let's face it, that's why I got in it, that's why you got in it. Okay? Nobody got into this because they didn't want the money, they just wanted to trade the markets. Nobody. Okay? Nobody. Maybe somebody, but you got to constantly be pushing yourself out of your comfort zone, and I constantly do that. So I'm always switching between live trading and demo. There is no point in your trading career where you're going to just go to live and that's that. If you're scalping, okay? If you're scalping, you're going to have to constantly know when to switch it up. And honestly, for the first fucking year, I don't suggest you do that, because you get caught in a rhythm for a week or two, you think you're a good fucking trader, and then all of a sudden everything fucking changes, and you haven't traded the summer conditions, you haven't traded a market meltdown, or you haven't traded the fucking Santa Claus rally, you haven't traded the week before Christmas where it's so fucking dead that it's not even worth it. So you get all confident, and then all of a sudden you fucking lose it all. That's what's happening. That's why those of you who are live trading, because I know a lot of you are too fucking stubborn and too proud and have too big of an ego to want a demo trade on a good quality demo, CQG and Jigsaw, by the way, not Rhythmic. I'm going to get into a video about that shit. So if you have Rhythmic, drop them and go to CQG. I'll do a video on that. Because their shit sucks. I just, basically their resting market orders slip way too much. It's unrealistic, especially compared to a live account. And I have side-by-side comparison videos, just in case you're wondering. But again, you just let me make sure I answered all your questions, and I'll probably turn it off here. So, so you're struggling. You found you're struggling with the day type and how to trade it. Well, it's just because you haven't done enough. You got to keep practicing. That's it. There's no shortcut around it. There is absolutely no fucking way to just do it. Okay? And I'm just like fucking dumbfounded by some of the videos on trading on YouTube. It's just idiotic. And everybody falls for it because people get desperate when they can make a lot of money, so they're willing to listen to people like that. Anybody that shows you something, this is why technical analysis guys fucking fail, is because that shift in the markets is constantly happening, and your indicator may work in a certain condition, but in a different condition it changes. Now here's the thing, I don't think order flow is the end all be all. I think it's a great complementary to technical analysis, but I think if the more time you spend with one thing, the better you're going to get at it. That's why I trade just the ES, okay? Be a market specialist, because you want to get to the point where you can squeeze the full potential out of the market. Look, I'm not trading my full potential in the ES. And until I do, and I can't do it anymore, then I'll trade something else. But who knows, at that point I might be getting so good I'm going to start flipping 100, 200 lots. You know what I'm saying? So be a market specialist and just trade one fucking thing. One fucking thing. Okay, so you haven't practiced enough in different environments. It's that simple. But you have the right thinking. The tape works better when it's slightly... The tape works good all the time, but it works a little bit better when the market's flowing in at a certain pace, and you need to figure that out. You need to figure that out. And other days, it's not working as good. Remember, on slower days, I'm looking at the bids, the offers, when it's real slow, and I'm looking at the market orders in here, not necessarily the tape as much. So I'm switching my focus to here. When it's real fast, I'm over here. If it's super fast, I'm just looking at patterns. Depends on the day. And so, yes, my style does change. So hopefully I gave you plenty of examples. Hopefully you get it. But it's so discretionary that I can't just tell you black and white. And that's another problem with newer traders or retail traders. I am a retail trader, but that's a problem with the majority, is they think, and I'm not, look, price action swing trading person, I'm not saying this is you, okay? What I'm saying is a lot of people want these black and white fucking answers when it comes to how do I trade, how do I do this, how do I execute that, it's so fucking discretionary. It is so discretionary, and it just changes so much that the smallest thing it makes the biggest difference. And every trade I take is always different, is always slightly different in some way. Every trade, certain setups are the same, but for the most part, the way it trades is always slightly different. And the only way you're going to get it is to be here for years. There ain't no shortcut. But the thing is, if you are able to do it, you essentially have a license to print money. And this is like, honestly, this is like going to college. I'm not where the fuck I want to be in my trading. Okay? What am I, over 4 years into this thing? And I'm not where I want to be. Like, I've put in a full year of not putting down trading. Before this, I'm a few months over a full year of trading every single fucking day. Before then, I would trade a few months at a time and then put it down for a month or a few weeks. For the last year and several months, I've not put it down at all. And that's made a huge fucking difference. And if you go back in my videos, if you guys have watched my videos from start to finish, you will see my progression. And it's just because I'm here. And that's all it is. You can't put it the fuck down. You cannot go on these streaks where you put it down for a week. You can't. You can't. You got to constantly be here every fucking day, and that's it. And you're going to make, the progress you make is going to be not very noticeable as long as you're learning something every day. And you need to be doing your trade reviews. You need to be recording your screen. I'm going to do a fucking video on that one too. Otherwise, you don't know what the fuck's going on and where you fucked up. And then if you're trading and not reviewing your trades, you're not going to progress. And if you compare a guy who's doing that for a year compared to a guy who's just trading for a year, the guy who's been reviewing within that year time is going to be substantially better. Because if you don't really know, you can think you knew what happened, but until you really look at it, you don't fucking know. And as far as pre-market prep, as a scalper, it doesn't really matter. I just know the feel of the market. That's it. That's what this whole video was about. It was getting the feel of it. So hopefully that answers your question and didn't confuse you, and it probably made you want to ask more questions, because that's the rabbit hole we just went down. But you're on the right path. You're seeing it. You're seeing something. You're figuring something out, and that's good. You're learning when to connect with the tape and when to sort of disconnect with it. So you get it. You fucking get it, and it's not black and white, and you're seeing that. So that's good. Now, hopefully you're reviewing your fucking trades.